let's kick started with interest rates. Now, we've spoken about on the podcast over the last few weeks, even months to a certain extent, that the sentiment has definitely changed in the market. They're baking in another 2 potential interest rates. Do you think the two-speed economy will take a bigger hit on this?
Definitely. I think the divide between the markets that are cooling and those that are continuing to rise, that gap's only going to get more exaggerated as these rate rises start to come in.
And from a property investment perspective, you're hearing a lot of people, ourselves included, out there saying this is some of the best buying conditions in certain areas. Do you think that's still being the case if we do see another 2 rate rises, or is that going to really impact the property market?
The sentiment's already factored in those rate rises. So while we're seeing now, arguably some of the best buying conditions we've seen since COVID, the market is completely uncertain at the moment. So what does that mean? Historically, you'll see going into a federal election or the May budget, there's little activity, and that's what we're seeing at the moment. But overlay that with uncertain macroeconomic matters, be the war in Iran taking place, that's another element of uncertainty. And on the back of that, likely rising inflation and therefore rising interest rates. So those 3 things essentially just equals complete uncertainty in the market. Sentiment, as we know, Reece, drives market, be that with speculation and or doom and gloom as we're seeing it take place at the moment. So I think a lot of the sentiment around interest rates is already taking place in the markets. I don't foresee the events, be that the rate rises, being any more catastrophic than what the sentiment's already doing. Does that make sense?
Yeah. Do experienced investors care about interest rates, or are they purely focused on market conditions?
Definitely, especially if you've got a lot of debt rates or a larger portfolio. If you see 50 bips in the next 3 months, that has a tangible impact on your cash flow. So I think playing the long term in terms of capital growth and where the markets sit, a sophisticated investor will look past that and will only see this moment in time as an opportunity. While everyone else is fearful, I'm going to capitalise. But what you will keep an eye on, what I'm personally keeping an eye on, is how can I get this asset to wash its face? Previously, I was doing my numbers on a 6% interest rate. I might conservatively now do that on a 7% interest rate, which sounds extreme. But when I'm looking at yields and how I can manufacture increased cash flow, I want to keep one eye on that, because if I go out there and buy all these assets on 2.5-3% yields and then interest rates all of a sudden surprise everyone and get to 7%, I've got a cash burn, I've got a cash flow problem. So absolutely, as a sophisticated investor, I've got to be doing my numbers on what does this mean.
Mortgage fraud is increasing by the day. There was an article released recently that they're estimating $3 billion worth of mortgage fraud across the majors. So that's your NABs, your CBAs, ANZs, Macquaries. Now, one of the big things that came out in the article that recently got released is it is AI driven, where documents are getting falsification of documents, where that being a pay slip, bank statement, employment details. How much of a concern do you see that from a regulatory perspective?
Yeah, when you think fraud, you think these serious offences, right? You think people are like money laundering, those sorts of things, but it's not. It's your everyday, misdemeanors. You could almost say that's where your boss might increase your pay slip, or you've falsified your spending habits, those sorts of things, or you get an accountant to sign off on your ability to service that trust. That's fraud, right? So they're the cases that when I read that article, looking into it, I'm like, what's going on? Is there a lot of international fraud, a lot of money coming into Australia that shouldn't be? It's not that. It's your everyday mum and dad investors that are misreporting or falsifying some documentation to get more debt. So what does it mean? It just means banks' ability to assess individuals is going to become better than ever. They're getting access to information. So the ability to get credit's only going to get harder as AI improves. And so you're going to see credit starting to tighten. We're seeing that across the board. And I think in the next 12 to 18 months, getting debt is going to become increasingly harder from the major and your first tier lenders. You're going to see a rise in private funders and second tier lenders as the major four start to clamp down on giving out access to credit, as we discussed with AI and fraud and those sorts of things. Your private lenders, your second tier institutes will start to mop up and open up the floodgates.